Okay, Compass International, which is not people with long memories for this show, including the person I'm talking to on the other end of this call, might remember me talking a long time ago about an incredibly boring but promising looking salt mining company called Compass International. This is Compass Group, actually, that I'm talking about this time, but Compass International is a salt miner. We're not talking about that today. We're talking about FTSE 100 company Compass Group. And Compass Group are a contract caterer, so probably they use some salt, but not the stuff you use for de-icing roads. If you're wondering whether you've heard of this one before, I can jog your memory a little bit, Steve. There's a name that you will have heard of in passing in connection with this company. I'm not sure you remember where you are supposed to identify it with now, but if I told you the name was Johnny Thompson, would you have any idea of where you ought to be thinking of for that name?
Yes, he was the diploma man.
He still is a diploma man, yeah, but where he came from was Compass. He was, I think, the CFO or something like that there. But he left there to go and be a part of Diploma. I misremembered where I thought he'd come from, or misremembered who the person from Compass was that had gone to Diploma. I thought it was their previous guy. But anyway, Johnny Thompson, former Compass group guy, and equally, very impressive job at Diploma, company we like very much, and I think Compass goes into possibly a similar bracket. In terms of type of stock, and I don't necessarily think of stocks in terms of types like this because I think it causes people to do funny things, but there are some things that you might call kind of defensive growth stocks, i.e., high priced, fairly high quality, very, very defensive businesses. A kind of classic example would be something like waste management. So this is a business that is fairly obviously defensive. That said, it trades at a high multiple, and it has the stock has been no slouch for the last 10 years or so. It has basically gone up and steadily to the right. It's done very well, probably outperformed the S&P 500. I don't know, but it's not a spectacular grower. People pay a high multiple, and you can kind of see why they pay a high multiple because it does actually grow okay. And there is a remarkable certainty to these sorts of things. Chances of it getting disrupted are very, very remote in this case. Okay, what does Compass do? It doesn't do waste management. It does the bit before the waste management. It's a contract caterer, basically. They provide catering services to various organisations like colleges, hospitals, offices, education facilities, senior care, stadiums, anywhere that has kind of contract catering bought in or has catering involved and thinks to itself, we don't want to be running a catering operation. We want to be running a something else operation. We're going to look to ship the catering in from somewhere. Compass has a kind of arm for this. They operate under a bunch of subsidiaries. They're fairly decentralized, which means that their individual subsidiaries have decent specialisms in hospitals or airlines or stadiums or whatever it might be. But they basically provide these kind of catering services. Long, complicated story about where they came from. It's actually quite interesting, but I won't go into it here for the moment. They are the external caterers for a whole bunch of different sorts of organizations. And the reason you would outsource that is because you don't want to do it yourself, because if you're not operating at scale, your procurement costs are pretty high and it's awkward to keep people on staff for this sort of thing. And you essentially, there is a big advantage to rolling up all the catering operations and operating at scale, which is largely what Compass has been trying to do over the last however long. About 60 odd percent of their revenues come from the US, which is their biggest market. Their plans for expansion involve basically buying their way into Europe, pushing their model out the way they go. The way they go is by essentially having a huge scale advantage. They have about a 12% market share, is what I was hearing. That doesn't sound like a massive market share, and it's not a massive market share, but it is about the size of their next two biggest competitors put together. So they are, by some margin, the biggest operator in this space. And when you see a big, essentially that means fragmented model. If you're 12% and the size of your next two biggest, everyone else is a lot smaller than you, barring those two. And the big advantage you get from scale is basically advantages when it comes to trying to buy food to cook and sell to customers. What they can do is buy things in bulk, buy things in bigger volume, pay less for it, negotiate better prices than their rivals, and then pass those costs on to customers, which is what they kind of aim to do in an important way. They don't attempt to kind of run massively higher margins. They try and keep costs down and win contracts like that, because the way they grow is mostly by winning contracts effectively in new areas. Contracts in this industry tend to last sort of between 2 and 3 years before they come up for renewal, and they will have a decent understanding of industries and can say, here's what we do for other hospitals, maybe we could do this for your hospital, and here's what it costs, and it's less than everybody else, and so on and so forth. Nothing super complicated so far. There is only one interesting, as far as I can see, kind of fun, complicated bit. They have a kind of organization or a unit called Food Buy, which is basically their procurement arm. And the scale at which Food Buy operates means it gets preferential pricing from suppliers. And what they do, however, do is let third parties buy things through Food Buy, i.e., through their kind of procurement arm, in exchange for a fee, which is kind of nice. It feels, and the Business Breakdowns episode that I was listening to makes this comparison, it feels a little bit Costco, right? Of come here and buy everything on the cheap, but pay us to do it. And this kind of suits everybody, right? So Compass get a kind of really high margin revenue stream out of people using Food Buy. Other people get to buy stuff for relatively cheap than they would have, and they can use that to kind of bring down their own costs. But Compass will still have an advantage because they're busy collecting additional, basically pure profit from this part of their organization. So I think this is quite an interesting firm. It's an example of the kind of business that I like, which is it's a dominant player in an industry that's not going away, and an industry that's probably growing. I think since the pandemic, what you've seen is increasingly people trying to outsource their catering operations, and they don't want to be doing them themselves. There's been a bit of a drive towards that, and as that continues, the market for this company expands and they have the best chance to run into it. They trade currently at 42 or so times earnings, which is pretty darn high. They have a lot of non-cash expenses built into that, so their kind of EV to free cash flow is actually about 24, which is in the kind of territory of not crazy if you think of that as a multiple. Whether or not you should think that's the right multiple because depreciation is relatively high, and I saw stock-based comp not in anything like tech numbers, but just starting to creep a little bit. And what you've seen is about 6% or so revenue growth per year, 6 to 7 over the last 10 years, bearing in mind that's a 10-year period that has a pandemic in it. But they have managed to work their way back reasonably well from this. So, yeah, I see this as a sort of interesting business. Certainly a watch list one, I think, for me, Steve. I'm not sure about a buy now one, but I feel like another one where I could be waiting forever for this to come down. What do you think?
I'm gonna start with the shock because I didn't know this company even existed. I'd never even heard of it. I must have just automatically assumed that a company called Compass, after we'd spoken about a company called Compass, was the salt mining company, and here we have a 45 billion quid large caterer. It does about 30 billion in revenue. Did I see somewhere? In a year, and then has this huge food buy sort of group purchasing organization attached to the side of it as well. So yeah, pretty impressive. It's basically, for anybody at home who didn't quite get that, it's basically a collective procurement system. So these group purchasing organizations are sort of like Groupon, but for businesses, I guess. So they all kind of sort of go together and, say you want to buy, I don't know, tomatoes, but you only need 6 of them. But if you bunch that with 1,000,000 restaurants that need 6, you're buying a good yield from a few farms. You get cheaper prices. And that's what this does. And this food buy group skims a little bit off the price, probably from both ends, if we're being honest, Steve. And yeah, that's a really interesting arm of the business that you would not expect to have found. I was sat reading the report, but not really mentioned anything about food buy, and then Steve mentioned it, and I immediately got rid of the report and started reading about that. Yes, I'm currently reading the Caterer magazine as well, Steve. Operating profit growing faster than revenues. Revenues actually up 8% on this half, which is mainly because they've started this big expansion into Europe. There's a couple of places they've bought. DuPont restaurants in France and Force Service, which you can only assume is a service station of some description in Norway. But yes, they are really looking to get this European expansion started. It's about 5% of the overall business at the moment, by the looks of it, and it looks like they're really trying to push that onwards. 3.6 billion of new contracts, which is an increase of about 8.5% year on year. They said they've got a strong pipeline of future business across all markets, and you would imagine with the sort of size, the balance sheet strength. I was looking through the debt, the debt they have. It's a decent chunk, but it's at very low prices. In the report, it's sort of between 1% and 3%, with only one little tranche of coupon debt above 4%. This is a company in a really strong position, and they're sort of ready to flex a little bit here, Steve, and flex their scale across Europe. And it's kind of like a flywheel effect, isn't it? That the more they sort of spread themselves against Europe, the more people will use this food buy program. And yeah, it could just get bigger and bigger and bigger from here. It looks like its biggest competitor, Steve, is probably Sodexo, which people may have come across before. I must admit, when you started talking about this thing, I was fairly terrified. You were talking about like the people who serve the pies in in like Hull City or something. I thought, oh no, not these guys. They they won't be very big. But yeah, this is a very impressive company, and I urge people who maybe at the beginning of this were thinking, right, that's maybe not a particularly exciting company. This has a little bit more to it than meets the eye, I think, Steve. And the only problem we've got is that everyone else seems to know it but me.
It's strange, isn't it, that one? It's one of these companies where I sort of think, yeah, this is a great... Oh, no, it's priced like a great business. How's that the case? I've never heard of this thing. How's anyone heard of this thing? Turns out people have heard of this thing and are pricing it pretty well. They retain customers pretty well. I view this as a kind of interesting case study in a bunch of business models that we quite like. They have a sort of flywheel subscription business thing going on through food buy. They have an economies of scale shared business model thing that we kind of like that goes through their kind of general operation. They have a roll up basically going on where they acquire kind of organizations with specific areas of expertise locally. This is going on through Europe, and they run a kind of decentralized conglomerate, think sort of diploma style here. They have individual businesses, and the hospital catering business runs separately to the stadium catering business versus the education catering business. It looks to me like a whole collection of business models and things that we know that we like about other business models in various different ways. Economies of scale combined with local specialism, diversified across niches, that kind of thing. Fascinating business. Chances of me buying it this quarter, well, never say never, but they've just, as you say, 2 days ago, put out their latest report. It looks pretty good, to be honest. Their net new business is 8.5%. Their churn rate is about 4% or so. It's reasonable churn, but if you're adding it, it must be about 12% or so to get you to 8.5 higher. You can probably live with losing 4 or so percent of people if you just add them faster and faster. And to some extent, that's a sign they're lower than you might think switching costs in this industry. And you probably want that if you're the company with the big advantage. You don't want it to be hard to get out of other people and have to go and buy their business to get to their customer base. Not much more to add to that, to be honest. Steve, should we talk about... Oh, go on. You got one more?
Well, yeah, just one more thing that I'm reading now in their press releases, Steve. So they look like they're currently doing all the catering for the LA Clippers. They're an NBA team. They play at the Intuit Dome, apparently. But yes, they've actually installed essentially a frictionless experience, which is powered by facial recognition. So you download an app which Compass developed for you, a customized app. You upload a picture of your face to it. You can then just walk up to the bar, pick your item and walk away. A camera will spot your face and charge your card appropriately.
It says, here's your pie, Mr. Daniels. We've set this up specially for you.
You're back again, Mr. Daniels. That's your third balti pie in the last 10 minutes. Yeah, that's what it says. But shit. I suppose it's worse. It's not as bad as a human saying it to your face. Oh, back again, are we? I suppose I'd sooner have an app just charge me again, and my wife saying, what's happening here? What is happening? But yes, interesting, Steve. The customized app, customized dashboards. They're doing a lot of things to try and reduce frictions and promotions and things like that. They're even developing apps that do labor scheduling, automation, better reporting, and recruitment as well. So there's some interesting stuff going on here, Steve. I think this is potentially a better company than than I originally gave it credit for.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.